It's hard to believe that we're almost at the end of 2024. And as Christmas approaches, the question is Santa Claus going to deliver candy canes or coal in our stockings? We're going to find out. My name is Brian Cannon, and welcome to Markets in 5. So will we get a Santa Claus rally? I don't know. We'll see. Basically, a Santa Claus rally, for those of you who don't know, is essentially the last 5 days of December combined with the first 2 days of January. So generally speaking, there's a kind of a load up of stocks going into January. And so, we'll see if it happens. Right now, the market has just had a really phenomenal year so far. And essentially, aside from a couple little pullbacks, it's been pretty, steady Eddie here. So now this week we have had a little bit of a pull down here, and that has a lot to do with the Fed and interest rates. And so as a result, it did actually take the RSI down to below the 50 mark, which is always kind of our red flag. It's not necessarily a sell right off the bat because it could certainly bounce back up. But, certainly if RSI hangs out down below the 50 and stays there, it's usually not good for the market. So, when RSI drops below, and RSI is relative strength index, so when that drops below 50 and stays down there, usually the market struggles. So if it pops down and pops back up, it's a buying opportunity. So, so we want to pay attention to these various levels. The market, when you look at the I want to say long-term trend. When you look at the medium-term trend, I guess is what this is. Depends on your perspective. It could be slightly, at the top end of this range, and so we want to look at the various levels of support. Of course, this pull down this week did take out the 20-day and the 50-day. So now we're kind of watching some of these trend levels. You've got the 100-day right here, and then you have the 200-day down here. So obviously, if it breaks below the 200, that's usually not good for the market and opens up a door for much steeper decline. So we want to kind of watch this. But right now, we're not going to make a move specific to the RSI yet. Because right now the MACD is not really confirming this move down. So if MACD were to roll over and get negative, the two of those combined really spell kind of trouble for the market. So we'll watch it, but I don't think it's anything to be worried about quite yet. Another chart that kind of supports my theory that, again, we're not, this pullback we had this week is probably going to result in a buying opportunity. Again, we'll keep our eye on it. But essentially, one of the charts that we look at is the 5-day relative 5-day moving average relative to the 100-day moving average. And when the 5-day is above the 100-day, generally speaking, that's an upward trending market. That's a healthy market. So right now, the 5-day is still above the 100-day, and so everything looks good. We're again in this uptrend, albeit a little bit of a pull down this week. So far, but it's all in the context of an upper trend, so not too worried at this point. So this would tell us that more than likely we need to buy the dip. Of course, we watch the levels. All right, so this is the VIX, the volatility index, and it's really a measure of fear in the marketplace. And as a result of the Fed announcement yesterday, essentially it shot the VIX way up and pulled the market way down. So, we're getting to the point where it might be kind of topping here. So it could be a good opportunity to put some of that. So if you have cash on the sidelines, maybe putting some cash to work. So again, we got to watch all of the levels, but when you get a spike like that in the VIX, a lot of times it sets it up for a precipitous drop. Which means essentially a good buying opportunity. And when we look at the VIX in another way, this is the VIX, relative to the S&P 500 and the correlation thereof. So a lot of times when the S&P is going up and the index and the fear index, the VIX is going up at the same time, that means they're highly correlated. So oftentimes that's followed by either a sideways kind of market or possibly a down market. So we did have a strong correlation not long ago, and so when we look at the fact that we've kind of come up and basically come back down and given some of those recent gains up, means that maybe this is it for it. Maybe it's just kind of a pull down back to this level. It could pull down to the longer term kind of uptrend, support level. So, but when you do have a spike like that, again, a lot of times it does drop back down pretty fast. So We'll see. We'll keep an eye on it, but right now, nothing of concern. So in wrapping up, we're not quite sure what Santa's going to deliver or has in store for us this Christmas, but I think the important thing is just to watch the levels and make some gut calls. But essentially, as long as everything's trending up, you just got to kind of hang through that volatility a little bit. But, we'll see what 2025 brings, and wish you all a very Merry Christmas. We'll see you on the next Markets in 5.